Hello everybody, my name is Rob Nixon and with me is the fabulous Colin Dunn. Are you there, Col?
I'm certainly there, Rob. Glad to be with you this morning.
It's going to be a very exciting webinar. In fact, we have had somewhere in the order, we have somewhere in the order of 3,000 accountants listening to this webinar from, as of about 20 minutes ago, just under 800 firms. So, Cole, this is obviously a hot topic that we're going to talk about today.
Certainly seems that way. Wow, that's a huge number, Rob.
It's our biggest one ever, and our job here, team, is to give you an hour of power. And what we're going to do is talk to you about some experience. Specifically, for me, I am 19 and a half years working with the accounting profession, exclusively with the accounting profession. And Colin, you've been an accountant for much longer than that. How many years are you ticking over now?
Just ticked over 25 years, Rob. So September 1987, the days of no computers, manual electronic trial balances, comptometers, and typing tools. That's how long I've been in this noble profession.
I didn't think you were that old, but anyway, we'll go with that, right? So specifically in the last 7 years, between the two of us, we have coached 600 accounting firms on the topic of pricing. And that's what today's webinar is all about. It's all about pricing. And it's been an awesome journey working with firms to change the way that they price their services, price their intellectual property. And we've seen some staggering results just recently. You know, talk about the size of fee that's been raised or size of sale. Just recently, under our tuition, a small 900,000 regional firm made the biggest sale in our network 6 weeks ago of $320,000. So, Cole, our education is certainly rubbing off.
It's rubbing off, and it makes a massive difference as well. And as we work with accountants, that pricing is always a topic that's of great interest. And I think, Rob, what we've got here today is something that everyone on the call can really benefit from.
Well, particularly when we've had, so many hundreds of people register, and we see the results that once implemented, because, today's going to be a fabulous webinar, will last an hour or so, and there'll be a lot of ideas and takeaways to go away from there, but unless you're going to implement, then really it's just a nice hour to spend here. So another firm that we've been working with, they've been averaging for the last 14 months, $2,800 per hour with their value-based fees work. Suburban accounting firm. And so what we're saying with this is what we're about to say works. You, as the participant here, have just got to buy into it and make it work for you. So, Cole, as well as working with these 600 firms, which you and I have done collectively, it's been a joy. We've also, between the two of us, sold in excess of $50 million of value-based fees in our careers as well. So we are coming from a depth of experience here. We are not interviewing any firms today. It's all going to be about pricing. And what happened, Colin and I decided about a couple of months ago, let's pool together that collective knowledge of the firms we've worked with. Let's pool together the knowledge of ourselves as well. And we filmed, incidentally, a product called Pricing Power. And what we're going to do here is give you an hour, condensed, if you will, all these years of experience and what we've filmed into the highlights of what you've got to do differently. So we'll talk about the product later on, but our promise today is that you will walk away from this webinar with some methods that you can increase your prices. You'll walk away with some methods and some process on how you can price your services appropriately. In fact, we've just finished a survey of 300 firms, and we'll be revealing 300 firms in pricing their services, 275 different services priced. We're going to show you what other firms are pricing. Our promise is also how to get your team involved and behind you, and ultimately, Cole, it's all about making a lasting difference on the margins that the accounting firms receive. And more importantly than that, it's about truly valuing your intellectual property and your smarts. So Cole, that's our promise today.
Rob, I think that's right on the money, and this is so important. And when we work with an accounting firm and look at the price they might charge for a service, and then the price somebody else over the road is charging is completely different, then we know that there's money left on the table. We also know that there's massive scope for increasing the way in which you can articulate the value to your clients as well. And so, Rob, I think we'll certainly touch on that too.
And Cole, I think that is going to be actually I know it's going to be the word of this webinar, and that is value. And that is specifically your value as an accounting business listening to this call. You're a partner, you're a senior, you're an intermediate, you're a new graduate, you might be an administrator listening in. What is the value of what you know? And this is the dilemma, this is the conundrum, this is leading into the biggest question we get, which is well, how much do you charge for whatever? So today we're going to be talking about your value, and because it all starts with your value. So first of all, let's get some interaction here, Cole, and you'll notice that there's a hand signal on your webinar chat bar there. Please raise your hand if you A, can hear us okay, and the slides are coming through, and B, if you're interested in knowing how to maximize and really capitalize on your value in the marketplace. So if you could, just so we can get a poll here, a quick poll, get some questions, get you involved. So hit the hand signal and get involved, and I'll get a thumbs up from the team that we're good to go, because I've got a quick thumbs up, thank you very much, so we're good to go. So first question we have, and as we start with what is your current value? Your current value will be currently measured in your average hourly rate of the work that you do. So quick calculation, and we're going to get a range here of, we've got a few questions, so we're going to do some polling here. We're going to get a range of what your current average hourly rate is as a metric on how you value what you do right now. So this is for the firm. It is revenue divided by client charged hours. Just make it approximate. If you do $2 million in revenue with 10,000 client charged hours, therefore $200. And we want you to put the answer into the chat session down the bottom there. Just tap in a number, and my team will give us a range of results of what it is, the range here. Because, Cole, this metric here, and just an approximate number, please, would be great. This metric really does tell us a lot about how a firm values their people, values their intellectual property, and really values what they know. So, Cole, this has been an interesting journey working with firms to increase this number.
It's a key driver, Rob, isn't it? And if you can maintain productivity around about the same levels year on year, and assuming your write-offs aren't blowing out of control and your WIPs not getting out of control, this is the number that's going to drive revenue and profit. Interestingly, Rob, just yesterday I was working with 7 partners from the same firm, and I had them do this exercise, and the range went from 96 to 364 within one firm.
Oh, really? Well, here I've just got some early polling coming through now. It looks like our lowest score is about $50. And mind you, team, the people that we invited to this are regular accounting businesses, suburban, regional, city, all over Australia and New Zealand. And we've had one come through at $800, which is awesome as a top one. Obviously doing a fair bit of consulting advisory work there, or values their prices differently. And most seem to be around this 150 to 175 mark average hourly rate for client hours. So that is your current measure. That is your current measure. Now, what we'd now like to do, because this really is a determiner of how much you price a service and how efficient you are and what you believe you're worth. And it's also a mix of clients, mix of services, all of that. So what now I'd like you to do is to put a new number in. So whatever it is now, put a new number in. What do you think it could be if you were to make some changes in your firm, whether that be pricing up front changes, whether that be efficiency changes, whether that be value-based fees change, whatever changes you want, whatever it is now, write a new number in, and we'll be able to match this, by the way, to see what the gap is. So if you could put that new number in, and let's say whatever that is for you, and we've seen firms double and treble this number, but it's up to you as to what you do with it. And every single month, if you think about this number, every single month this number should be increasing, because as a metric for how efficient you are, you price up front, drive time down, we should be getting more efficient, and we should be pricing better and serving our clients with value-based fees and value-based projects. Highest is $1,000. There you go. Look, we've got some super keen firms on the line here. this number should be increasing every month because it's a measure of how well you're serving your clients and how you are pricing and how efficient you are. So that's going to be our objective here, is to get you to that number. Most of them have doubled. Okay, thank you very much, team. As far as the average has doubled. So now what I'd like you to do is to take your client charged hours and multiply that by the new number that you've put down. So let's say you were $200 an hour average hourly rate, and you said I want it to be $300, and you did 10,000 hours, therefore $2 million to $3 million in fees. And it's that gap between where you are now to where you want to be, that's what it's going to cost you by not doing something different, and that is all profit. So as an interesting question at the outset, Cole, start people to wake up a bit and say, hey, we need to do something about this because we are leaving money on the table, as you said.
Well, that's right, and you're spot on, Rob. It is all profits, and if the average is 150 and the average wants to go to 300, then the numbers that people on the webinar are crunching now, you know, for a 10-person firm, you might be looking at $1.8 million there. So these are big numbers we're talking about.
They're big numbers, and pricing. If we look at where pricing comes from, you know, pricing is associated here with the client. You know, price is a critical mix. And pricing also, it's everywhere. It's associated with marketing. You know, most people who went to university did a marketing degree, and they learned about the 4 Ps of marketing, being product, price, place, and promotion. And here, what I find, Colin, in the accounting profession is no one's ever taught accountants how to set the price, which is, when it's such a fundamental part of business, there's never been any teaching other than what we do, of course, but I'm talking on mass, on how to set the price. You're from the UK, Cole. What was it like over there? Same sort of thing?
Exactly the same. And I had partners when I joined the firm there hammering me about, you know, you've no commerciality. Well, that's because we don't get taught that sort of thing.
And so consequently, the way that it's taught is based on this ludicrous notion of time times rate to get to the price. So what we thought we'd do is as part of really synthesizing how do you set the price and how do you articulate that and how do you get the client to say yes to that, we thought we'd come up with a formula for you because we know you love your formulas. So the formula is in 3 parts. And the idea of the formula is to answer the question we get the most. We coach the accounting profession. That's what we do. We're very good at it. And this is the #1 question. Okay, got all that, guys. But how do I set the price? What is the ideal price for the service? So we have 3 parts to the formula. And the answers to these 3 parts, so the sum of the 3 parts, will pop out the ideal price of your service to your clients. So I'm not going to reveal all 3 parts initially. We're going to do it in stages. We're going to spend about 15 minutes per part because really, as we think about it, if we had these 3 parts to this pricing formula equation, then your margins would be where you want them to be, which is typically double where you've set on this webinar. So by implementing this, it seems my slide is a little bit haywire there, so just put up with the bottom line. It does say ideal price, so it's all good. So by implementing these 3 points, 3 big points, you will get to the ideal price for your services. So, Cole, we ready?
We're ready. Let's go.
Let's go. So the first one is going to be value belief. The other 2, as I mentioned, we're going to unveil as we go through the hour of webinar together. We're going to talk about value belief. So value belief being, when it comes to setting the price for the invoice, how much do you believe that's worth? You know, so how much are you going to write on this invoice based on what you're going to do or what you have done? And of course, most common method of this is going to be a time-based equation of some sort to write that number down. And there's some inherent problems with the majority of the methods being time-based equation. And Cole, certainly we talk about on this new DVD learning program, you know, 5 different methods of pricing, and the most common one is, of course, this hourly rate method. Talk us through some of the issues, Cole, that you've discovered in coaching firms around hourly rate pricing.
Well, the hourly rate, of course, is is calculated based on some sort of multiple of the salary that you're paying the particular person doing the job, and then to come up with the price or that person's contribution to the price that's charged. There are a couple of assumptions made, and the first one is that the hours actually logged to the job are correct, and the second one is that the rate itself is correct. And I think, Rob, what we find is that really nothing could be further from the truth. And certainly with a sole focus on productivity, which is what we see in many firms, that there are all sorts of deleterious consequences, such as just dumping time on jobs where people know they can stand a little bit of time being dropped on. But also, there's a real problem with this methodology, Rob, in that if your business model is we price based on our hourly rates and we price in arrears, so we look at what goes on to work in progress, then we write a bill, taking a write-on is really unethical in this case. We just can't do that.
Yeah, so what happens there, Cole, if we price in arrears and our business model said time times rate, whatever's on the clock, we bill. If we decide, oh, we've been super efficient with this, then let's write it up, then you're going completely against your business model. And if you're taking to court, which many firms have been over the years, and to lay out your timesheets, you're doing the wrong thing there.
Right.
Completely the wrong thing. So consequently, you're not absolutely incentivized by going fast. In fact, the team are incentivized by going slow and making mistakes because you will effectively charge more. Now, I know that firms don't want to charge more, do they need to charge more, but just driving time forces people into bad habits, padding out timesheets, dumping time into things they shouldn't be doing, going slow, etc. So that's all bad as far as that one goes. And so we believe, and we've seen it time and time again, that every single project, and a project being a task, like an end-of-year review, a tax planning project, or a due diligence, a business plan, a GST or a BAS, quarterly or bi-monthly, it depends where you're from, or alternatively, and the tax statements, the income tax return, we believe that should all be priced up front, every single one. Every single project priced up front before commencement. So as one way to drive our margins, we price up front. So the quick snap poll, and just as a hand raise here, how many of you price every job, every project up front before commencement and communicate that with client? Not just price internally, but also communicate that with client, because we will have a lot of firms doing that, because we've been talking about this, Cole, for a long, long time now.
We have, yeah.
So a quick poll on that, and we will we'll see the answers come through in a moment. So as we're doing that, we have a little pricing quiz. And this quiz is a common project which pretty much 100% of firms have done before. And what I want to know here is how much have you charged for this service in the past. Now, tomorrow's a different story. When you get some of this knowledge and you have some more confidence and you learn what other firms are doing, which is part of what we're doing today, bring you all together to say that how much you charge for this and that. Tomorrow's a different story. I want to know, we want to know how much have you charged in the past for this service. So let me give you the parameters of it, and then we'll get a range, because part of this value belief will be highlighting, individual projects like this one here. So here's a scenario, and I want it to be just an honest number. Doesn't matter what the number is. It's in the past. It's gone. You've typically done this in the past, so just plug a number in as I'm going through this exercise, because we're going to come back to this exercise later on in the webinar. So here we go. The client runs a retail shop, and they do $1 million in revenue, and they make a profit of $250,000. That's what they do. So that's your client. The service is that the bank has requested a budget and cash flow projection for the next 3 years. So the service has been led by the client, not by you investigating this opportunity. The client has said, look, the bank's called up, and we have to do a budget and cash flow projection for the next 3 years. So your product to provide is going to be a bound-up document with a 3-year projection, so it's going to include some analysis, of course, and then some calculations, bound-up document that your retail client can take to their bank. Now, you're allowed to ask one question only of the client, and you'll see why this is important, because some of you, by the way, just go, okay, we'll go and do that, and you charge an appropriate fee. So the question you're allowed to ask is, why does the bank want that? And the bank wants it so they're confident that I, the client, can support the current $50,000 overdraft and the new $300,000 working capital loan. So my question to you is, how much have you charged in the past for this service? It's a standard 3-year budget and cash flow. The team are going to just put in whatever the number is, just the average price you would charge. Do a quick poll of the people that are around your table listening to this right now, and to put an average in there. We'll see what the range is. I'm interested in the range here from what to what on this call right now, and just be brutally honest with this. So, Cole, we're just going to wait as those come through. But what's your experience? What do you anticipate is going to happen with this this pricing range that's about to come through?
Well, I think there'll certainly be a range. There'll be some at the low end, there'll be some at the high end, and it's really interesting in that I recall doing a job very similar to this around about 20 years ago, and I'll be interested to see the numbers that come through today, and then I'll tell you what the number was that we charged back then. And I think there are some reasons why prices change over the years as well. So we can see some numbers coming through now, Rob.
We can. We've got a low of $450 and a high of $12,000. Any other highs coming through, team, or is that it? So interesting, Cole. I've got a low of $330 now coming through. So whatever it is, whatever it is, and you know, everyone's had the same information here, Cole. So
That's
there's
right.
no. It's all about your belief and what you've done in the past.
That's exactly what it is. Exactly what it is. So just to finish the little story there, we in the firm I was with, we charged £3,500 sterling for pretty much this exact scenario 20 years ago.
And you know, Colin, in 1994, I bought one of these as a client. I was not a retail shop, but I bought one of these from an accountant. It was $5,500 in '94.
Yeah.
And I queried the bill. I said, how come it's $5,500? I was very poor back then. I was questioning everything. And you know what the accountant said to me? The accountant said, well, that's how much time it took us to do it.
Yeah. Sure. In the days of the old Lotus 123, clunky, it wasn't easy to do that. It took a long time, and therefore that translated into the price.
So consequently here, we've now got, so all done, $330 low, $12,000 high. So a 36 times multiple on this webinar. So clearly, which is extraordinary, for exactly the same thing. So clearly some firms have a higher value belief, and it starts there. The first sale, if you will, is to yourself. You must believe, and please, if you've got nothing else other than this bit right here, it will tell you many more are charging more than you. By the way, I've done that exercise in workshop, Colin, and I've had 2 of them priced at $30,000.
Right, yep.
And I queried the both of them. I said, that sounds a lot of money. You know, why so high? You know what their answer was? Their answer was, both of them said the same thing. Without us, they can't get the loan.
Exactly right.
So what is the right price? What's the right price here, Cole? What's the right price?
Well, who knows? And one thing that we know is the price is never right. And so it all comes back to your formula, Rob. I think we're in part 1 of the formula now, and I'm eagerly anticipating, as I know people on the webinar are, the other 2 parts of it, so that we can get an idea as to what the right price might be. But at the end of the day, the price is never right.
And the reason the price is not right, and we clearly know that time-based billing is not going to produce the right price, is because we're not selling a commodity here. We're not selling, you know, I've got a bottle of water in my hand which might sell for $3 at the service station, you know, and they're all priced about the same, you know, because the market says I'll pay about $3, $2.80, $3.30, $3.50 type thing, or a coffee at $4. We're not selling commodities here. We're selling what we know. We're selling intellectual property here, and therefore it should not be based on any metric of time. It should be based on your value belief, number 1. So let's go a bit deeper on value beliefs, because I find that, and just right now, for 36 times multiple, we have some limiting beliefs when it comes to pricing. And here you are, busy at your desk, thinking, okay, this is all great, I've got lots to do, the phone's going, we're on this hour together today, and you'll be, clients will be backing up on emails and phone calls, and you might be saying, look, look, I'm not going to bother, our charge rates are in line with others. It's a pricing belief, you might say. You might say, look, I'm too busy, I'll just charge by the hour, it's easy. And granted, it is an easy system to do that. You know, time and rate, easy system, multiply it out, away you go. But it will not value the pure intellect of what you've got. It'll probably take X hours, so I'll charge Y, is a limiting belief. You know, so you've priced it in accordance to hours. Or this one, I can get it done really fast. And Cole, that's what you're talking about with this technology aspect. Back then it was very clunky, now it's very efficient.
Exactly, yeah.
Or this one, a belief. Look, there's too much time on the clock, we better write some off.
How often do we see that?
Indeed, indeed. So it's interesting, we've just had a comment come through, and this is a belief. This is a belief comment come through. If we price it at $30,000, the client may go somewhere else. They may not. Who knows? This is a belief system. And the reality is, you've got to work out what's the right price for you. And that's the important part about this. It's your value, it's your belief. But these beliefs get in the way. I'm afraid what the client will think. At the end of the day, yes, the clients will think whatever they think, but it's not their business, it's your business. Your client might be in it for $5, $6, $10, $20,000. You're in it for millions. And it's your business, and you need to run this business as if it's yours, not your client's. And at the end of the day, it's none of your business what your clients think of you, that's their business. Another one, what if they say no to me or they leave? They will. Because they will say no. And in setting the price on this belief system, I'm reminded, Cole, of a quote from years ago by a fellow called J. Abraham. He said, it is arrogant in the extreme to dictate to the marketplace how much they'll pay. So what does that mean? What I interpreted that was, we put it out there and test it and see what the market is prepared to pay, and if they keep saying yes, then the price is wrong. The right price is somewhere just before no, so based on your value belief, we need to keep pushing how far before we get some, but then you'll get some no's. And this is my favorite one here. My clients will never pay that much, and my response to that is, how do you know if you've never tried? And these beliefs, Cole, these beliefs, oh, there's another one as well. Belief is that my clients will go down the road and buy it cheaper. Yeah, thank you for that extra one that came through. That we can add that to the list. These beliefs of past history or past ideas chatter away, and they are gnawing away at our margins and gnawing away at our value and gnawing away at the self-belief and self-esteem of the accounting profession.
But they are, Rob, and the interesting thing about the 30,000 is that, you know, you put that out there and said 2 accountants have said 30,000. Let's not focus on the 30,000. We're not saying the 30,000 is the right price. But 2 accountants said, I would talk to the client and say it's around 30 grand with that information.
And Cole, how can we say what the right price is when on this call we've got a 36 times differential on the same product?
That's right, yeah.
So who knows what the right price is, but it starts with your value belief. Let me give you another example as we look at all these accounting things that you do and how much do others charge. So we just finished a survey, let's bring this up here, a survey of accounting firms, about 300 accounting firms, and what we did was we asked them, of these regular services, how much do you charge? So 300 firms, and we synthesized the list to 275 services. And we took the median results, so not high, not low, but median, and we listed out, you know, specifically for that service, how much are firms charging. And this is extraordinary because it really gave us some insights, and this is literally, it's just finished published today, so it's available today, which is awesome, fresh off the print roll, so to speak, on how much firms are charging for individual things, regular things, you know, compliance, business setups, business advisory, you know, business improvement, wealth creation services, and it's just extraordinary to see what firms are charging. Again, like that 36 times differential, we found the same thing in the survey call, and that's why we select the median price. And so, you know, actually put your hands up if you'd like a copy of this, which would be pretty cool. It's 275 items, right up to date. It's been, last time we did something like this was 2008. So Cole, it'd be interesting to see of the 16 pages, 17 pages of pricing. Who wants hands right up? Lots of hands going up. I'm sure they are. Because here, this is what your peers are charging for services. But again, massive change in what firms are charging for whatever service it is. So, Cole, what do you make of all that with this value belief and all this just different pricing numbers that come through?
It's a critical part of this whole pricing conundrum. Unless we can get past these limiting self-beliefs, then we're always going to be leaving money on the table. And I think, Rob, it really helps to know what other accountants are charging. And I think that's why there's such an interest in this menu of services document. And as you rightly said, there were some outliers there, which is exactly why we chose the median. And so there were people saying 50,000 for services that most of the market was saying 2,000 or 3,000 for. And so we've not just taken the average, we've taken the median and knocked those outliers out.
Exactly right. So if our first part of the getting to the ideal price conundrum is value belief, our second part is the client's value perception. So first of all, you've got to believe that your service is worth more or worth whatever, and certainly doing what we just did there, doing a bit of pricing surveys and seeing a list of what other firms are charging, 300 firms, good sample size. But now how we're going to put that across to the clients. So now we're getting involved in value perception. So to do that, to get to value perception, so you might believe, yes, it's worth $20,000. Well, how are you going to let the client know about that? So here's where we play a game, and the game is called Where's the Value? And how this works is before you go ahead and price and or communicate price and scope with clients, you need to articulate to yourself where's the value. And you say, well, okay, where is the value in this project? What am I actually contributing to the client's well-being or whatever it is? And we know that when it comes to the time, back on the time here, the value is, well, it only took me 1 hour to do that task. My thing is, well, it took you 20 hours to learn how to do it in an hour, because previously it used to take you, it took you 20 years, sorry, to do it in an hour, and previously it used to take you 20 hours. So typically, the more efficient you get, if you're under the charge rate model, your charge rates will never keep up with your efficiencies nor CPI, and it's bizarre. So where's the value? The value is not in time. In fact, there's no value in time. What's the old saying? Time is money. I'm going to suggest that time is not money. Time is not money. Time's just time. Money is money. Time is not money. Yes, we need time. We need labor to put into these tasks, but that does not value what we've got. So we need another way. We need to articulate the value to our clients. So here's another pricing conundrum here. There's the sandwich. Now we're talking about value perception. How much would you pay for this sandwich? Please put a note in the chat, and we'll get a bit of a range. Price of sandwich. So standard, what's that, a club sandwich there, Cole, with a bit of bacon, bit of cheese, 3 levels. Club sandwich. How much would you pay for the sandwich?
I'm getting pretty hungry looking at it.
So, it's pretty good. It is lunchtime. So we're getting some ranges come through. We've got 8, we've got 6, we've got 10. Did you know, team, average is $7. Yep, $7. Did you know that this sandwich here is 22 is the highest, 6 to 22. Thank you. The average, this sandwich here is the world's most expensive sandwich, 100 British pounds. Why? Why? You're a Brit, Cole. What? Why? Why would you pay 100 pounds for this? Which is what, $180?
Yeah, something like that. Yeah, my wife always says the Brits are eccentric, and here's proof.
You know why? Because the perception, and you can search this on the internet, and you can see the perception of this sandwich is it is the world's most expensive sandwich, and this particular sandwich has a particular style of ham that's come from a rare pig. The cheese has come from only 5 cows in the world, and the perception is, wow, this is an exclusive sandwich. So this sandwich is 100 pounds. It's searched on the internet, world's most expensive sandwich. And I love what one of our participants has said here. It is basically, well, how much does the client want it? Because if you are starving and you have no other food, then you'll pay, and you've got money in your pocket, you'll pay whatever for the sandwich. Sure. See, when it comes to pricing, the value perception is what the client is prepared to pay for it based on their perception of what they get for it. And what I find, Cole, sorry, you go?
Yeah, I was going to say, I mean, despite the origin of the ham and the cheese, it's certainly not priced based on time and materials.
Not at all, you know, because if I take the cheese away, it's probably the same price.
Yeah, sure.
And if I add another layer, it takes a few seconds to do that. It's not going to be an extra time of doing that. So no. The price on value perception is what the market's prepared to pay. But what you've got to do as far as an accountant goes is to get really, really good at articulating the perception to your client. So let's have a look at, you know, the work that you do. And the work that you do really, in my view, does make a massive difference to your clients. But what happens here with the work that you do is you are just doing the work. And whether that be annual compilation work that comes in the form of a bound-up document with words and numbers, or whether that be, you know, a document that's got some graphs like this one on the screen, that's all well and good. And the perception, unless it's explained to the client, is that it is a document, it's a report, it's some pretty graphs, it's some words, some numbers. But when you really pare it back, when it comes to the perception, and by the way, often your clients have to be told what the perception is, you do some amazing things. You know, you look at the work that you do on an annual basis, and you're helping your clients with profit improvement, but you don't tell them on how much profit you've helped them to make. You're helping your clients with management decisions. Based on the reports you give them, they make management decisions to improve their situation, but you don't articulate and tell them, this is what we've helped you to do. Help them with peace of mind, you know, by the work that you do in restructuring their affairs and then transferring their assets and looking after their debt and their liabilities, etc. You're helping them with peace of mind. You're helping your clients with tax minimization, tax saving. I remember years ago, I went to an accountant, Cole, and they so proudly told me, oh, Rob, just to let you know, we saved you $149,000 in tax this year. Thank you very much. It wasn't part of the project. The project was annual compilation work. Why did they go and do that project as well? When clearly the $149,000 by some rejigging of the work that you do, which is not part of the scope of the compliance project, you know, a lot of value. But it should have been priced in advance. Cash, you help me free up my cash and improve my cash flow and understand my cash. That helps me make better decisions. It gives me free cash flow. You help me with improved lifestyle by the work that you do for me. But you don't tell me that. You have to get the perception across, you have to articulate the value that you're actually providing to your clients. You help me keep me out of jail. I spelled that wrong. There you go. You keep me out of jail, not goal, but I achieve my goals by keeping out of jail. There you go. So,
that's beautiful.
Very good. We're looking for success here, Cole, not perfection.
Exactly right.
And you help me with success. You help me with business success. But again, you're so central to this, but you don't tell me about it. You must articulate your value. You help me to create and improve my wealth, you know, by doing the things that you do, minimizing my tax, improving my cash flow, you know, investing in other areas, improve my wealth. You help me do this, but you charge by time. So the perception is, and you don't explain, you know, every single year what your work does. So consequently, I just think it's just a piece of paper with some numbers and words on it. You have to add value, and the client's perception will increase. And of course, you help me to protect my assets as well. So you are helping me as a client, but you're just not telling me. So my perception is that the job's worth that. But the reality is the outcomes that I get from it are far, far more. You know, just this morning, Colin, you don't even know this, but I had a meeting with our accountant this morning. And he said to me, it was a client advisory board meeting, fantastic idea. He took me for a coffee, and one of his questions was, Rob, look, I'm just interested to know as a firm, and we've been a client of the firm for 6 or 7 years now, 6 years I think it is, what do we do well? What don't we do so well? And you know, what would you like to see changed? And we started on the what we do well bit, and I said, you know what? You sent me an email a while ago, which is very long, and that email as a result of it, saved me about $3 to $5 million in investment that I was going to make, in decisions I was going to make. I said, and I really appreciate you thinking about me, but he does that, and he had the guts to come and ask me and front up. And there were a couple of things that I said you can improve on, but I look at that and say, here's a firm that's really adding value. They're thinking about my needs, and they're adding value by the advice. They're adding value by articulating their advice and having a tangible result. You, as a listener here, are already doing this. We're just not telling our clients about it. So my perception is, if I just get a set of accounts in the mail or courier with no added value around it, all I see are numbers and words of things I don't understand. Cole, what's your view on this whole perception thing when it comes to clients?
Well, Rob, I think you're right on the money, and for many of the firms on the line, and that last thing you said there, if all you're doing is mailing it out with a sign here sticker on, just one simple change to the process being you tell the client, we're not going to do that this year. What we're going to do instead is we'll come and see you, and we'll talk you through these accounts and bring it to life by putting some charts and some diagrams in there. That gives you the opportunity to articulate to the client everything that you see on the screen right there.
And it's having that conversation. It's a frequent conversation and finding the value, because this, as you'll discover with this formula, we've got value belief, value perception, and the last one coming up in the next sort of 15 minutes or so to get to the price. It goes back in a loop. So once you understand these three, you go back to resetting the price. And a lot of it has to do with personal belief and communication. And really, because there's no right or wrong price. We've demonstrated this morning, there's no right or wrong price, or this afternoon, there's no right or wrong price when it comes to the service at hand. Now, Cole, we made a promise at the start that we're going to talk about, how you can increase prices, how you can price your services, sell additional service, etc., and what to say in sales meetings. Just want to talk for a few minutes, if I may, regarding what we've created in this larger program that firms can invest in to really make this happen on a structured basis and to teach their team. And so we decided, because we can only coach so many firms at a time, we are limited by our labor, so we thought, okay, well, let's coach many, many more on this particular topic in a different way and give the same personal coaching that we would give on how to do this, but actually put it into a DVD learning program called Pricing Power. And this is the ultimate guide to pricing professional services. I just want to step you through it for a few minutes as to how it works, and then we're going to wrap up with the third part of our equation and bring it all together so you can see, okay, let's go away from this and actually put something together. So what we've done, Cole, is you and I went in the studio, as you know, and we pulled together, spent a lot of time on this, the 11 modules internal training program, which was just fascinating to create because it was drawing on the collective knowledge and put into a training program that an accounting firm could teach themselves and teach their team members as well. And of course, if they wanted to advise their professional service firm clients, which are not accountants and non-competing to us, they could use those materials to advise their clients as well. So it's got a double-edged usage here. So just want to quickly run through the modules and what's in it, and then we'll wrap up, as I said, in a few minutes with the last part of our equation. So first module is all about the 5 methods of pricing, and it's a stop-start, have a discussion about that, why pricing up front is the only way to go, and why to do that. And after that, we're in a structured way, so how you're going to introduce that to clients, easy steps. Now, some of you may be already there with this, and that's great. You may be already pricing up front, so you can skip ahead to the to modules 4 through 11 because it's in a sequential order, because we've taken this from a view that we're coming from a price and arrears situation and step you right the way through to a value-based fees situation. How to price up front, including raising your prices, actually how to do that with compliance work and also other work that you do. Creating capacity, Cole, this is fascinating, as a byproduct with pricing up front, that we can create capacity in the firm. It's pretty cool.
Happens all the time, and firms start to run out of work pretty rapidly. And what that shows is that most firms can grow without having to hire more people.
So with that, going from there, going to what is it and what's the importance of value pricing. So value pricing is different to price up front. And then moving through to getting to the right price. When is it right? When is the right price? And we're touching on that today, but certainly in a structured format studio, we've got exercises for you to take you through. And make sure, of course, we're going to come back and finish at the end with the final part of the equation, articulating your value. Make sure that you understand how to do that, identifying value-based fees project, selling value-based fees project, including a role play. Colin, that was a fascinating role play that we had where we had a live sales role play so you can see, well, how am I going to take this to my clients?
That's right. Yeah. I think everyone will get a lot from that, Rob.
And lastly, putting it all in writing, so we've got implementation and proposal templates to seal that deal. So an hour and 45 minutes of DVD, audio recording, and a transcript, and also supplementary resources and a workbook. And with that, the workbook is it's a program that you will teach your people. Exercises, team involvement sessions in the workbook. We have the standard letter to send to clients to introduce upfront pricing, proven process for finding opportunities, 5 implementation plan templates. We've picked the best, scripts for pricing and sales, new client questionnaire, 93 great questions, because it is, as you'll discover as we do our final exercise, it's all about asking great questions. And then certainly the question we have for you, the big question we have for you is how much do you charge on this call, and you'll find out towards the end of the webinar how you can get that menu of services for free. Interview checklist, a structured interview process, which we've got some articles, and then there's role play that we've pulled together as well, and then a 12-step tested sales process, which ties it all together with case studies as well, so you can role play with your team. So a very comprehensive program that is in a box that you can actually take and take your team through this. So talking about how much this is, if we were to unbundle it, we would price the DVD program at, say, $1,500, the audio program at about $300, $300 for the transcript, template letters about $1,000, scripting about $1,000, questions to ask about $500, sales process $1,000, role plays $1,000. So the total value of this package is $6,600. But what we're going to do is actually price this at $1,650, including GST. And today, by 5 p.m., you'll be able to, we're going to sharpen the pencil on that, you'll be able to get that for $990, including GST. And we decided to actually bonus in, but again, only today by 5 p.m., we're going to bonus in the menu of services price list, which has got 285 services priced, 300 firms represented, as I said. It's all medium prices. And the cool thing about this, Cole, it's by accountants, for accountants. It's your prices, your industry, telling you how much they charge for whatever. Some of the firms online. So who knows how much that's worth, Cole, the menu of services, but that alone, and you can get that today, that alone will actually increase your margins dramatically. So that's pretty cool. And then what I thought, I made an executive decision, so you get the menu of services as part of the package as well. I made an executive decision to have a 50 times return on investment guarantee. We're so confident with this. And how this works is that if after implementing these ideas on the program itself, you don't achieve at least $50,000 in additional profit, then let us know. We'll refund your money, and you can keep the product and all the templates in full. So nothing to lose there, Cole.
Very strong guarantee, and I think, Rob, like you, I stand right behind this product. It's a super product, and everyone who implements it will get massive value.
And as I said before, with the professional service clients, you can take the same ideas to them to advise them on their pricing structures as well. So it is very much a pricing ultimate guide to pricing. So let's wrap up with, and you can get that, by the way, by going to proactiveaccountants.net/pricing power. We'll send you an email after this as well, but /pricing power, proactiveaccountants.net. You can do that. So let's wrap up with the final part of our success formula here, Cole, on the to get to the ideal price. So value belief, value perception, plus your value contribution. And your value contribution will determine, the three of these will determine what is going to be the price. So what do I mean by value contribution? Well, let's go back to this example that you priced from $330 to $12,000 for this service. So what is your real contribution to this particular situation? So here, with the service, if we keep asking questions, you'll find that your contribution is far more than just producing a report that the bank wants. So, and the secret to finding your value contribution and your value belief and your value perception, Cole, is all about asking questions.
It certainly is, Rob, and there's always a reason, a deeper reason why the client needs a particular service. And even with what we see on the screen there, Rob, it says the bank says we need to have it. Well, why does the bank need that? Well, we've got some more information here, but why is that an issue in the first place?
Correct. So now, as you find your overall contribution to go back to your value, back to your client's perception, and ultimately setting the price, by asking questions like, why the loan? Why do you want to do this? To reinvest the funds into stock and marketing, the client says. But you don't stop there. Ask another question, why marketing? I want to grow my business, the client says. But you don't stop there to understand the real contribution here, because it's not just about getting the loan, it's about something else. I want to grow my business. How much growth? I want to double the revenue, triple the profit, plus another location. Okay, let's ask another question. Why the growth? So I can sell it in 3 years' time. So your from $330 to $12,000 service has a much deeper meaning. And you ask another question. Why do you want to sell it? So I can retire gracefully at the beach. So all of a sudden, by asking deeper questions that start with why, and normally, you will find there's a far bigger play here. And this is your value contribution. At the end of the day, your contribution is twofold here. Number one, if you actually just provide the budget and cash flow projection for the next 3 years, fantastic, it's self-help from there. That's one part of contribution. They may or may not achieve that. But your second part of the contribution is when now you have a whole host of other services that the client may need to buy from you to actually, and price differently again to achieve those outcomes. So now we have a vastly different project on our hands that we need to price based on your value belief, the client's value perception, and of course, your contribution. And Cole, what I found, and you're probably the same as well, that firms don't spend enough time asking deeper questions to really understand the value that they're creating and providing.
No, they don't. And the other implication of that is that clients don't often know exactly what a firm can help them with. And so by having this discussion, it gives the accountant the opportunity to let the client know that we can help you with growth. We can help you with profitability programs. We can help you with selling the business. We can help you with your retirement planning. And so there are all sorts of opportunities here for broadening what you can do and bringing more value to the table.
See, when it comes to contribution, when it comes to value belief, when it comes to value perception, it is all based around a client's buying decisions. Do they buy based on rational decisions? Yes, if they don't see any value in it. Or do they buy on emotional decisions and make a different decision based on what they understand it to be? So, for example, that example on the budget and cash flow forecast, it's now by asking deeper questions, your contribution is to help them, with safety, help them with wealth creation, help them with lifestyle, help them with asset protection. But most firms don't ask the question, and here's why. Because most firms, as we plug all this together, are too busy talking about inputs, not outputs. And what I mean by that, because we need to plug this program together now, and so why is it so? What happens is accounting firms' language, or accountants' language with their clients is predominantly based on inputs. We need to do some analysis with you regarding that situation. We need to give you some advice around that. It's an input. We need to do a budget for you. It's an input. It's a thing. It's a tool. It's a document. We need to do tax planning with you. It's interesting. Tax planning, financial planning. Financial planning is an input. It's not an output. It's an input. It's a thing. And what's the output of financial planning? Well, output of financial planning should be wealth creation. I'd rather buy that. Inputs being end-of-year tax statements, end-of-year statements, end-of-year compilation work. It's an input. It's a thing. Meetings. We need to have a meeting about that. It's an input. Where's the output? Tell me about the output. Why are we having this meeting? An input would be valuations. We need to do a valuation of your business. It's a thing. Accountants talk in inputs. And often, it flows through to engagement letters, and so we need 3 of these, 2 of these, 5 of these, and an audit as well.
That's right.
So an input would be consulting. We need to do some consulting around that. Okay, that's great. It's a thing, but what do I get out of it? Because the client is wondering, so what do I get out of it? Unless you tell me what I get out of it, value perception, value contribution, then consequently I'll just think your value belief is very low, and I'll only pay very low. Structuring, it's an input, it's a thing. Why do I need to do that? Oh, we need to do that so we can protect your assets. Okay, I'll buy that. Or time, it's an input. And all these inputs, accountants talk in this language, and it's what the client believes is what you do. Far better to actually talk in a different language. And the language being, based on us doing this, we will help improve your profits. So you must scope it out before you start. And if you can wrap a number around that, then your value belief will increase, and so will the client's value perception. Based on doing this work, we're going to help grow your business, grow your revenue, grow your wealth. I'll buy that. I don't want your planning session or your monitoring session. I want the growth. Based on what we do for you, we can help you improve your cash flow by $16,000 a month, and with that, so $192,000 a year, but we've got some work to do to that. So you articulate your value based on what you're going to do. Now this, of course, means you need to scope out the job before you start. I'll buy the cash flow. I don't want to buy your cash flow budget statement. Security. So I'll buy the security, the asset security. I want that. Now wealth, I want some wealth creation here. You help me do this, but you don't tell me that you do this. Talking outputs. We're going to help you with your retirement, either financial retirement or otherwise. As an example, accountants every week just about are helping their clients restructure affairs, save tax. And let's say it's $42,000 a year in tax. But for 10 years, so $420,000. If you articulated your value, said, hey, Cole, we need to do some work with you. We've worked out in advance, by the way, that if we were to do this project, we can save you, as in tax not to be paid, $42,000 a year for at least the next 10 years. So we are talking about $420,000 in money you don't need to pay to the tax department. If we could help you do that, I'm just curious, what would you do with it?
It's a different conversation, Rob, isn't it?
Different conversation. And all of a sudden, I only took an hour to do, that's beside the point, the result is $420,000. Success, we can help you become more successful. You do this anyway, you don't tell me that. It's left up to my own device. Peace of mind, we can help you with peace of mind, help you improve your lifestyle, and lastly, by working with us, we will give you some hope, and hope is a very, very powerful motivator. Just think of the cosmetics companies. That's what they sell. That was a joke. Thank you, Colin, for laughing. No one else did. So, as we go to value contribution, and these all tie together. So we've got value belief, value perception, value contribution equals ideal price. Once you understand your belief, where I believe this project is worth more, and maybe do some internal price testing with your team. Okay, here's the project, here's the scope, how much should we charge? And ask your people, just like we've done on this webinar. Value perception, how are you going to put it across to your clients, and talk about the value that you're creating for them. And then your contribution, you talk about it again, and maybe you go back and reprice the job. So this all ties together and loops around, and it's all about the value that you provide. It's like the accountants of this world, Cole, are the worst kept secret of value contribution, because we know you contribute enormous amounts of value, you're just not articulating that value, and first of all, believing in that value. So very excited, Cole, to bring these ideas. We've only had an hour. As I said at the outset, this program, this package for $990, including GST. Absolute bargain. It'll work with you for the rest of your career because the ideas are timeless, and you'll be able to change the way that you do business and achieve what you want to achieve out of your business, which, as we go back to the average hourly rate, maybe it's that improvement of double that you're looking for, or that gap, which is all profit. And of course, Cole, what that's going to do is improve the financial position of the firms listening into this call and also improve their lifestyles as well. So I'm excited, Cole, to bring this to the profession in this cohesive manner.
Me too, Rob. It's been a lot of fun today, and I know a lot of people are going to get tremendous value from what we've put together here.
So in wrapping up, go to proactiveaccountants.net/pricing power and do it now. 5 p.m. You'll get the menu of services immediately. Based on the production run, the actual product might take a week or two to arrive, but certainly proactiveaccountants.net pricing power, and you'll get that menu of service. It will be emailed to you immediately that you purchased the program. Hope you enjoyed the webinar, Cole. Massive record crowds today, obviously a topical topic. Looking forward to hearing the results and looking at these poll results as well with the firms that have been on it. So, Cole, thank you to you.
Thank you, Rob, and thank you, everyone, for joining us today.
All the best, and good afternoon. Bye-bye.
Bye-bye.